Hey guys, Allison with Rising Point Solutions. Today I have one of my partners, Kristi with Academy Mortgage with me. Thanks so much for coming on today, Kristi. I really think it's important to be up to date with what's going on, especially in the mortgage industry during this COVID stuff. So I wanted her to kind of go over, since she's a very experienced lender, to go over kind of the differences and some of the options that we have when it comes to the loans and maybe deferring payments. So Kristi, do you want to kind of go over some of that with us?
Yes, I'd be happy to. First off, we need to say is make sure you talk to the person who has your loan. What options are available with them, because every lender is offering different things when it comes to forbearance. And there's several different options besides forbearance, but right now with the COVID, we're hearing about forbearance. And we just want to make sure people understand what that actually is. Forbearance lets you make reduced payments or no payments for a set period of time, though your loan continues to gain interest during this period. The skip payments are due at the end of the designated timeline, and in some cases, the lender might let you spread them out for the next few months, but that is up to the lender. So I cannot stress enough to make sure you talk to your lender and see what they're offering, what it's going to be after you come out of forbearance. Are you going to have it all at one sum or not? And forbearance should be the last resort, actually. It can hurt your credit. It's like saying that you are default on your credit. It won't show late, but it will have on there that you had a forbearance on there on your loan. And it's like a defaultment. But there is also a program called Deferment where you can defer it. And a lot of people know about that, when it comes to student loans, their student loans are deferred.
Right, exactly.
Deferment allows you to skip monthly payments, and sometimes it puts the interest on pause too, which is a better thing. And with a deferment, your payments might be due at once the designated time period ends, or they might be tacked on at the end of your loan. So those are the difference between forbearance and deferment. Also, there is loan modification. And this is a process that allows you to change the terms of your loan, your interest rate for a set period of time. And it might be a better solution. You do have to file papers for that, hardship papers for that loan modification. There is work to do for loan modification, but I would definitely do your research before you go in and just want a forbearance.
Yeah, that's smart. I've heard mixed things. I mean, you hear so much information out there. So are you saying that in a forbearance, like for instance, for a 3-month period, like I know, like when I called my mortgage company, I called Wells Fargo, and they were like, the automatic message said that, okay, so, you can do a forbearance for up to 3 months, but you may owe those 3 months of payments at the end of that term. So is that the end of that term? Is that at the end of that 3-month period?
Yes.
So
yes.
like basically you're going to owe 4 months of your mortgage in one payment on that
at one time.
That's crazy. Yeah, I mean, I think that's so important to do that research than just sign up for the thing that sounds like easiest to skip your mortgage payment for a couple months. But so they do have options though for people that really do have financial struggles right now. It's just
correct.
The best option and know all of your options.
Right. And make sure you're actually talking to your lender. Don't assume, hey, they know I'm doing a forbearance, I'm not making a house payment. You need to communicate that with your lender. And if you could, always advise to maybe get something in writing on the terms that y'all are coming to. So
yeah, no, that's smart. Yeah, I always tell clients, make sure, especially if you're like dealing with any kind of debt where you're trying to pay it off or do a pay for delete, to get something in writing. Always cover your butt and make sure you've got that documentation. So that makes perfect sense. So how would this affect, because I get these questions, I get all kinds of being, credit repair, but only working with you guys. Of course, clients that are coming to me are always trying to get a loan. They ask me all these kind of questions. But so if someone is doing a deferment, so say deferment's a better option, and how does that affect like doing a refinance down the road, or does it even affect doing a refinance down the road?
Well, we want to make sure a certain period of time has lapsed since that deferment so that we can show a good paying history since that deferment. Okay. And usually it's 12 months, so since that deferment.
Basically this time next year, when everybody's covered, it'll look a lot better on your mortgage. It just takes time. So kind of like credit, the longer the length in time from the incident, the better the situation.
Correct. Yes.
Interesting. I think that's all really good information. Is there anything else that you can think of that people need to know about what's going on right now in the mortgage industry?
Well, since we are in an uncertain time right now, and people are not working and everything, the lenders, the investors, Fannie Mae, Freddie Mae, Ginnie Mae, have all tightened down on their credit score requirements.
Yeah,
A
I've
lot of
definitely seen that.
a lot of the lenders have gone up as far as your credit score requirements. So we're all feeling the impact of this. It's affecting a lot more than just people working and stuff. It's affected what you have now to get a loan, a home loan, and that type of stuff. So
Yeah, credit score, I mean, obviously that's my bread and butter, so I know that the importance of having a good credit score, but what about like the fact that there's gonna be some people that are out of work for a small period? Is that gonna affect them being able to get a loan down the road? Or do we even know that yet?
we don't even know that yet. It's so uncertain how they're going to view all that, and
Right.
how the impact it's going to have on people doing deferments and not paying their house notes, because that's putting the servicer in a bind because their servicer still having to pay taxes and insurance on a property that they're not getting payments on.
Yeah, I didn't even think about that. That's kind of crazy.
Yeah.
Trying to think of any other questions that clients ask me. Um, I can't think of it. Are there any other questions, like general questions you think that you're getting asked right now that might be beneficial?
Well, I mean, a lot of people are wanting to refinance right now if they can. And of course, you cannot refinance unless you are working right now. So,
Oh, that's
I mean,
interesting.
having to verify that every 7 days that you are still employed right now. So,
Wow. So if you're out of work collecting unemployment, you cannot qualify for a refi right now.
no.
And I know I've had a lot of clients that are strictly looking for a refinance to pay off this debt because they're in that situation where they're kind of struggling and trying to make ends meet. And a lot of times it's not a feasible situation because if your score is not where it needs to be, you're not going to qualify for a refinance right now anyway.
Right. Right. And I just told a customer today, with all this uncertainty and how people doing the deferments, how that's going to impact our investors and stuff, that I lost my train of thought.
You're good. You're good.
We're not sure what's going to happen after this. I mean, it might be even hard. Like we know Chase, and we're hearing this in the news, that Chase is doing over 700 credit scores with 20% down.
Yeah,
So,
I saw that.
yeah. And so after we come out from this, it might be even hard to do cash out refinances because investors are going to be afraid that they're going to take the money and run. And then they're going to be stuck with all these homes where people have drawn out the equity. So
Yeah, that's interesting. It's going to be really interesting over the next, what's even 30 days, 45 days, and things are changing. They seem to kind of have slowed down a little bit, but we just don't know. So you're completely
right.
right. We have no idea what the next couple months are going to hold. So,
Mm-hmm.
well, is there anything else that you want to go over? Because I do want to touch a little bit on some of the credit stuff that you can think
No,
of.
I think that's it, unless we can think of something in a little bit. So go ahead.
Okay. So one thing, and I know I've been popping on a lot about credit. So how to deal with your credit in a crisis. Same thing, kind of like we were talking about with the mortgages. Call your creditors, make a list, and know what your debt looks like. Contact each creditor. Try to make, if you really truly can make a minimum payment, try to at least just make a minimum payment because not all creditors are the same. We don't know how each individual creditor is going to deal with us with late pays and reporting to the bureaus that you're late. That affects your credit. We don't want it. We want to protect our credit going during this so that when we get on the other side of it, if you need to go get a car or homeowner's insurance or any kind of, situation when your credit's going to be pulled, that you're equipped for that. Especially if you're even holding off on trying to do a mortgage right now and you want to make sure that you're ready, maybe summertime. So smartest thing you can do, I know a lot of us are getting those stimulus checks. Think about it as not just a free paycheck. Think about, what do I need to use this money for? Do I need to put it in savings for a little while because I don't know if I'm going to have a job next month. Try not to look at it like a tax return. Every year around this time when people start getting their tax returns, they start blowing it and going crazy. Just be smart about it because like we've been saying, we don't know what the next couple months are going to hold, and we don't know if we're going to get another stimulus. Who knows? It might just be this one time, and
Right.
next month you're just kind of doing whatever you're doing and working off of whatever you're making. So same thing with student loans. Contact your student loan servicers. I'm not a student loan expert. We do at Rising Point have a contact for that helps us with clients with student loan stuff. I know someone that reported back to me that they contacted their student loan provider and they don't have to make a payment, till August. It's not going to affect their credit. They're not going to have late fees. So, I mean, knowledge is power right now. So make sure, just like with your mortgage company, your credit cards, your car note, anything, that you're contacting them. I think that's really, really important. So yeah, I can't think of anything else right now, but when we post this, if you have questions in the comment section below, definitely post it, because there's never a bad question. You could be answering someone else's, problem. You never know. So, but yeah, let us know, contact us directly if you need anything or have any questions on credit or mortgages. And I think that's good. We're good to go. All right. Well, have a good day, Kristi. Thanks for coming on.
You too.